Hello guys and welcome back to another YouTube video. I have recently been on a trip to Ibiza and are now back and ready to smash out the charts and keep on providing information to you guys on a weekly basis. So today we're going to be breaking down the trade that you could have took on the 30th of July. It was a Tuesday, a beautiful trade using the Asia range, looking at the accumulation, manipulation and distribution, targeting the Asia high, Asia lows. So look, let's break down, let's go into the chart and see how you could have taken the trade, just how I would have if I was trading a pair. So I don't actually normally trade this pair. This is Australian dollar against the United States dollar. I don't normally trade this pair, but I want to talk about how the setup works and how it can work on all time frame that uses the dollar. Actually, someone in my group actually pointed this out for me and I wanted to do a YouTube video on it. So look, without further ado, let's get into it and let's break it down. So I'm looking at the Australian dollar USD right now. And essentially what I'm looking for sales. You can see we're very, very bearish in this market. And now we came to a phase in the market where we're just accumulating. What I want to see here is I see that price started to shift downwards. As you can see here, we took out this low in the market. Okay, and this is obviously a clear break of structure. Price is breaking back down to the downside. And now what we see a big strong push, just one out, and then we see a correction back up. Here on the 30th is where we're going to zoom in on the lower time frames, actually pinpoint that entry. Let me just zoom in a bit more, like so. And the dealing range we're currently in is within this high and this low. Okay, this low here, so that high to that low. As you can see, we're in a premium level. It's good area to sell. Yes, zoom in and let's try pinpoint this entry for everyone. Okay, cool. So let me jump down onto the 5 minute. Okay, perfect. So I hope everyone can see this clearly. Make this nice and clear for everyone. Okay, perfect. No, that sounds good. That looks good. Okay, cool. Actually, let me just zoom in a bit more on here. Okay, because this is what's important. We'll talk about the rest later. Okay, so what I want to look out for when we approach Asia highs, Asia lows, is I want to see price accumulate. I then want to see a manipulation, distribution, and then price to distribute in the other direction. So accumulation, manipulation, distribution. Yes, pinpoint this on the chart. So as you can see, from this low here, we had a strong push up. We create a high just before this Asia high here. Let me just drag that across there and mark that as the Asia high. As you can see, top right there, that's the Asia high, and that's the liquidity there. We want to see sweat. Cool, top right, perfect. And as you can see, what we can see here is we see price accumulate, like moving sideways like so, okay? And this is our accumulation phase, which I'm going to highlight in this box. This is price moving sideways, accumulating, okay? And as you can clearly see, from this low in the market here, we've seen price push up and actually break above that high. Yes, we see a little wick there, but we come back down. This is a strong break above, as you can see there, okay? Manipulating people into the market, manipulating people to think we're going to go long. Then what we see happen is see price trade back down into the Asia range and actually take out all these lows in the market, okay? And this is something that's given us, I'll just highlight all there, this is giving us a market structure shift. This is price changing in direction, okay? And then this is also price sweeping out these highs. Here, if I just do X. So as you can see, price pushes up into this level. We then see price accumulate all the way through here. And then what we see price do, we see price push up, create a low here, create another high, and push all the way down. Okay, so there's kind of three phases in this. We got the accumulation phase, which is here. Okay, then we got the manipulation phase, which is here. Let me do that there. That's the manipulation phase. And now we're currently looking at this distribution phase, okay? So accumulation, manipulation, and now distribution. Now, everything that happens on the left-hand side of this, so essentially all of this already here, this is what we're looking out for. Everything on the right-hand side should be systematic. We shouldn't actually even have to think about it. We just enter the market and we go with the flow. Okay, now I normally like to enter of inefficiencies in the market, and what I like to do is I like to look at this phase in the market here, from that swing high to that swing low. This here is indication, is after manipulation, this is price, it's the first phase of the distribution and continuation in the other direction, okay? So what I'm gonna look at, I'm gonna really zoom in on this level and pinpoint areas where we see price reverse from, okay? So let me just highlight that in now for everyone, okay? Let me get rid of that, and this, and this, and this, and this, just to tidy it up a bit, and I'll just put that there, just to tidy it up, okay? So now looking at this, I've got that swing high to that swing low. So what I'm going to normally do is from that swing high there to that swing low, I like to draw in my Fibonacci retracement levels. So let me just push that all the way across there, like so, okay? So once again, I've now got that candlestick pattern up there, which is the, oops. Did I move that by accident? There you go, perfect. And I've got that swing high there and swing low, okay? Now this is what's really important. I'm now going to study this move, and I'm going to identify areas of imbalance in here and where I want to see price potentially go to. So the first one I identify is in here, okay? And as you can see, price actually balanced out here. As you see, price traded below it, come back in, tested it, and we pushed away from that again. So that's indicating to me that price, let me get my text box. Price has tick. Price has pushed away from this level in the market, okay? So that's been filled. So the next level of inefficiency in the market would be in here, okay? Running all the way across there, okay? So when I see price come down here, because you've got to think, if I was to rewind time, I would only see price take out this low. I now realize that this has been balanced. The next level of inefficiency that hasn't been balanced is here. So that's the next point when I can potentially price reverse from. Anything higher, I'm thinking, well, price has already actually balanced it out. There's no point actually to target up these highs and look for these OTEs when the next basic area I want to see price balance out is that low, or it's this point in the market. So what I can potentially do is wait for price to come into there, and obviously I just look for my fib levels. Ideally, I want to enter the OTE, which will be the 0.79 to 0.62 Fibonacci retracement levels, okay? But in this instance, I'm more than happy to take trades of the 0.5 because this is equilibrium. This is basically saying from that high to that low, I'm in equilibrium, which is in a premium level, which is a good area to sell. As you can see, we've now traded above that, okay? So with all these confidences added together, this leaves a really strong point to look for sales in the market. And you can simply look for sales plus buy, short position, entering here, and then looking for the continuation to the downside. Now, there's two areas where you can basically place your stop loss. One could be this recent high here. This is more of a risk approach. So this is be a risk SL. And then you've got a probably more safer route, which should be putting SL above the overall swing here. So safe SL, okay? So they're the two levels you can put SL. So you can put them tight here, like I said, because basically what we're saying is, well, price is already balanced out from here. If price is probably going to trade higher than that, it's probably going to be wrong. Therefore, I'm willing to put my stop loss here. Or you can go a bit safer and put your stop loss above the high. So yes, say for example, we do went for the safe route. I normally put about 1.5 pips over the above the SL just to be safe, just in case any like swaps, not swaps, like slippage, anything like that can actually cause, well, broker issues that can cause my trade to be stopped out if price were to trade higher. And then, so that's it. So I would put my stop loss there, that'd be my entry. Now, all I'll be looking for is TP is now, I zoom out, okay? I've got my one standard deviation, which is down here, which is related to this Fibonacci retracement levels, as you can see here. But also what I've got here is my Asia low, okay, which hasn't been swept. And these are great liquidity points in the market because it's where all traders will basically see where the market's going to head to. So this is Asia low liquidity. And all I would do is then look for target, basically that one standard deviation, as you can see there, or I'll look for the Asia low. Now, because the one standard deviation and Asia low are quite similar in direction, and as I look left here, there's no really roadblocks to tell me that price could potentially push away from here. I'm probably looking to take out this low in the market, especially taking in the whole higher time frame narrative, in the higher time frame premium level, looking for those sells. What makes sense is to put my stop loss here. Okay, Now, as you can see, if I just drag that all the way across, full TP would have been met, and 2.7R would have been banked, which is obviously a beautiful, beautiful trade, as you can see. Now, what I've done here is I've taken a higher time frame narrative, same we're in sales. I then looked for a dealing range on the higher time frame. This was the 1 hour, and I notified what was in the premium of that dealing range. I've then gone on a smaller time frames, and I tried to pinpoint my exact entry requirements in order to take the trade. In this instance, it would be clear accumulation just before Asia highs, as you can see there, for manipulation of that, and then the distribution of that back down into Asia low. And that's all there is to it. That's all I'm looking for. That's all I'm trying to locate on a day-to-day basis, utilizing Asia range, London session reversals, and then trying to find the next liquidity point, next draw on liquidity where I want to see price be delivered to. Okay, so that's essentially how you could have banked a 1 to 2.7R on the Aussie dollar on the 30th of July on a Tuesday, which would have been a beautiful trade with little to no drawdown. Very, very accurate. Sniper entries is what some people quote it as. And then a full TP and a beautiful 2.7% if you're using 1% per trade. So yeah, look guys, this is just a quick short video to get back into the swing of things. Obviously I've been away on holiday, but this is just a beautiful example of using accumulation, manipulation, and distribution in the Forex market, utilizing Asia range, utilizing a higher time frame narrative, understanding where we're in the premium of the dealing range, and then just looking for those sells straight back down to the next liquidity point. Okay, so look guys, if you want to see more videos like this, please like, share, and subscribe, and I'll see you in the next video.